Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, July the 13th, 2013. For me, it was kind of a very amazing day. And the reason is because the market just basically took off again, but really was doing it prior to the PPI number. And the PPI number initially was like, what do we do? And I think that could have been partially jobless claims. Who knows? But it was momentary. And then the buyers just stepped back in. And it actually was under the control of a couple of things. One, that this type of trade was actually happening quite heavily, is what is in options trading, or just in trading, it's the dispersion trade. And when you understand how it's constructed, particularly right now, what is truly taking place is that traders are selling index volatility, and that could be the ES, the SPX, the NQ, the Qs, the spiders. They're selling index volatility, and then they're turning around and buying a volatility of the index component companies. So they're feeding each other. And then what also happens is that each segment is then hedged. So with the underlying. So it is just a spinning wheel. If you can think of the hamster running on that wheel. And so as fast as it possibly can, because that's what it was doing today. It was nonstop. And again, it brings into full light the exchange, the NASDAQ, coming up with, like, they're going to have to figure out how to rebalance the index to get it out of the hands of situations like today, where we had one stock. I mean, the market was up, no doubt, but it's not that Apple was running massively. It was up like $1 something, and then down, and then up, et cetera, et cetera. Even, Google, yes, added nicely, up $5. But in terms of weighting, the weighting in Google combined, because it has an A and a B stock, that combined, Google can contribute up to 7% of a move. So the price action in Google carries a pretty high weighting. So again, there's that. And that stock was up strong. Meta was up strong. Microsoft was up strong. Tesla bounced around but ended up strong. But NVIDIA was up over 20. And then after the physical close of our markets, they bid it up, and it's now up $3 from the close. So, and still going. So here's kind of how I'm tying this all in. So the dispersed trade is in full force, and tomorrow's expiration. So you got zero DTE dispersion trades going on. And so there's so much that is outside of the realm of, was that a good number? So they're all pleasing. They really like PPI. Well, they really like CPI, et cetera, et cetera. It's really down to this trade. And this trade is huge. So I really am expecting it might be pretty much in line with what it did today, a slow butt walk up yet again to get through the expiration. If they decide to reverse that trade at some point, which they may, right? Because what you put on, you're going to have to take off, and we've got an expiration. So a lot of it comes off. Gabble-wise, a lot of it evaporates. So positions get adjusted yet again. So I think it could be a wild day tomorrow. So looking at the S&P, I'm looking at the hourly chart. That's where I'm going to hang out, because it's really just pretty much, I'm watching the development of this final minor fifth wave. Now, I know we got a lot of stuff and people going on, so let me just really take 1 minute to explain that there are often times when I'm going to reverse the labeling as I'm demonstrating or showing an alternate view. And if we're at a cusp in the market where that alternate view or the preferred view gets to take over, but there are going to be times when they're really running neck and neck with one another, and you can put an argument together for either one. And that's really what I do. As a day trader, I step into the market every day. So I'm interpreting on that basis of just being able to go in and trade. So having an idea of what direction should be. What can we look for? Well, I'm putting together all of this other information that I'm getting and saying, will this trade be all done? No, not if I'm looking at NVIDIA, which gone up another 50 cents while I'm making this video. So again, a lot going on, and it's numbers. It's numbers, it's a type of trade, it's volatility. It is not bullish, bearish. It's the PPI, it's the CPI. It's volatility. Okay, back to the S&P. I'm counting the last 5 up. So again, this has been my preferred count. I've reinstituted it, put the labeling back in. I never took down the fibs for a minor fifth wave, because under either count that I was using at the time, that would still be the anchor to start the minor fifth. Okay, we're inside 1, 2, and I have been saying 3 would be active, right? That we'd come down, finished 2, and took off. So here's how we come in. That's Wednesday. And then we come down. Look like we may have needed a little bit more of a 4. Looked like we were going to get it. And then we finished the day, and then we didn't. And here we are overnight. And then we come in and we get the PPI number, and they buy it, and they take it up on the opening, and we pretty much just kept on going. So it kind of was a day, not so much as far as a day trader, because sometimes you did get these big drops and sells. And depending on the size of your account and what and how you trade, you maybe didn't want to hold on because you were up good money. You didn't want to give it back because, again, you're a day trader and anything can happen. So, but if you're a swing trader, you really just bought it and stepped back, put your feet up and just watched the trade. And it was that kind of a day. Okay, so we're in the third. Now, as being a part of the third, I truly wanted it first to get above here, which is 45.32, which is where wave 3 would be 100% or equal to wave 1. But being the Elliottician that I am, I wanted more because I don't want even the threat or a hint that wave 3 would be the shortest out of 1, 3, and 5. And I got that. So now we don't have to run it all the way, but we did, and we ran it a fair amount. So 45.41 is equality. The high today was 45.52, 45.50, and that, just that number, is resistance. It's a large, round number. It's, to a lot of people, in the stratosphere. So, you watch it carefully. And so, but here's the trick, or here's the gig. There's a possibility if I'm saying this is 1 and this is 2, 3, and that's 4, then we're inside 5. Outside, 1, 2, and then we get up and that's a 3 and a 4, and we're still 1, 2, 3, 4, and we got one more rise to our wave 3 comes in at 1.618 of wave 1. Perfect. Good fib to the Elliott, et cetera, et cetera. Then we get a wave 4 pullback. But yet, okay, now tomorrow's Friday. So if we get all this and then it pops up to get in place tomorrow, then we're going to have to come down. First, we got to go up, finish 3, come down in a 4, go back up in a 5th. It may take longer. Again, it may not happen at all. It could just kind of go up and then hang out up there, which is what happened today. You get a bulk of a move overnight. You get a pop right away, even before our opening. And then we just kind of go up there and we don't ever pull back. So it'll move. In any case, I'm leaving additional room up to 1.618. Again, this outside number is the intermediate wave C. Let me just pull it open so you can see it. It's the intermediate wave C, and then it'll be at 100%. So we have equality coming up at 45.56. That's equality where wave C would equal wave A. So we're pulling in to numbers that should begin to control and start to signal that the next move is open. Because in all honesty, a solid break above 45.56 in terms of intermediate wave C brings things up to, and I'm going to tell you again, the potential or the possibility for an irregular B wave, because 1.618 for wave C puts us in new all-time high territory. It's nothing to do with being bullish. It really does not. It's a number and it fits in the fib, and it could fit in an algorithm, and off we go because they have a target. So, of course, there has to be some support otherwise, but I'm not even going to go there because right now we need to clear 100% and clear it substantially, right? Because I'm going to take it back down now to the hourly, that what I have above this is 46.03, where minor wave 5 is going to be 100% of minor wave 1. So we have met the 100% level on intermediate wave C, just in terms of an intermediate degree, just above at 100% for minor wave 5, which would then in turn complete this. So see what I'm doing, or see what I'm noticing? We reach levels that could complete the level above it. We're just exceeding that level, which is fine, but we're completing in line with what we would look for, equality between minor wave 5 and minor wave 1. Got it. And then we'd have to wait and see, but we're going to get lines up here, because if we're completing 3, we get a 4, a 5 could bring us here. But we'll redo the fibs, because this 1.618 is for wave 3. It's for wave 3, not anything beyond. So if we're finished counting this and we do get a wave 4, this comes off. Additional will be added, so this stays, but we'll be adding additional fibs, which are going to take us up into this zone, because this is what we have left. Again, the 2.618 would disappear, but we're moving out into where minor wave 5 would be 1.618 of minor wave 1. It's there. I'm not saying that's what's going to happen. It's a number, and it's a target. So it's like waiting for it to get hit. It's just a target, a Fibonacci target. I am not saying that that's where the market's going to go. I will tell you this one on this side, labeled 2.618, comes off because that is associated with the minute 3, which I'm expecting to finish up pretty quickly here, go into a 4 and then a 5, so it would not be effective. These would. And what I'll be doing is adding additional for a 5, again, comparing it to minute wave 1, which was fairly large in and of itself. So we could get equal moves. So how deep this goes, we might get 100 and some odd points, and that's going to bring us up into these levels. So yeah, all continues to work. Now, and everything's still in alignment for it to go up. Now, that's what I'm tracking. I'm tracking the development. I'm tracking the actual wave, and we'll see. We'll see what happens, because all things would point to an exit. All things would point to, it's like, that's it, show's over, and we're moving on. Now, I'm not going to tell you I don't know what to trigger, but we have in open discussions have basically said, well, it should be something negative because everybody's got to switch and turn. But think about this. When it's time to switch volatility play, guess what comes back into play? The immersion trade. So they'll start buying index volatility and selling volatility on the index components. So it's going to be a strange one when it works in reverse. So You'll be selling the volatility of stocks like NVIDIA, Apple, et cetera, et cetera. Selling that volatility and buying the volatility in the index. Because the volatility in the index as the market goes down will increase. Just think about the action, think about why you would do it, and then you'll see where the money flow is. All right, everything is heading in the right direction. Over in the NASDAQ, okay, so what we got going on is the same thing. Here's minute 1, minute 2, minute 3. This one is a little bit different, right? Because here's what I got. 1, 2, 3. I'm giving it the same 4, but there's one little bit outside here. 1, 2, 1, 2, 3 of 3, right? I get that. 1, 2, 1, 2, 3, or 1, 2, 1, 2, 3, 4, 5 of 3. So that, or we need one more little drop and another boost to finish 3, depending on how you want to count it. This has been a very powerful third wave. And it took to get inside the third or the 3 of the 3 before we really saw its power. So here it was very questionable because of the sellers that would come in and that would be it. And then suddenly the buyers would take over. So as that trade developed, but then again, here we had this, but we were looking for a 4 and that might've been it within the third wave. So yeah, maybe we get a little bit more, maybe that's it. And we do pull back. And then what you're going to do is you're going to run retracements of just this particular third wave. And if it truly is from there to there, then you're looking at pulling back to 15,500. Whoo, so far. Right? Remember, we crossed again today where we really started to climb above 15,525 and just start heading and getting to 15,600 and just saying that was a-okay and getting to 15,700. The immersion trade at work. So it is, or dispersion, excuse me, dispersion trade. It is immersion, but it's a dispersion trade. In any case, we're looking for minute 3 and then a minute 4. And we still have a minute 5. We got the same thing going. A lot of these will disappear. Of course, this one will because that's the pullback. That's if that high does not get broken and we move into a 4th wave. What's more important, it's not the top. I'm looking for a wave 4 and it could clip 100 plus points off of it and still rally back up and get above here. So let's just take a peek. 1.618 is in the NASDAQ, excuse me, the wave C. So we're reaching upper levels in the NASDAQ on an intermediate degree that should contain what's going on. And we're not that far away from it. That's the 4-hour chart. Above there, we're up to new all-time highs. So we got the same deal that we got going on in the S&P, going on in the NASDAQ. Accordingly, using the fibs on the intermediate degree, if the market breaks cleanly above 1.618, the thought process is, well, 2.618 is where the next stronger resistance is going to be found on an intermediate degree. Coming back down, we're in a minor degree in that 5th wave. We don't know yet, but we do from here. And what we're really pulling up into, I'll take it back down to the hourly chart, in the minor, right? We haven't reached that 0.618, which actually minor wave 5 to minor wave 1, what comes in most of the time is equality. So in the NASDAQ, we still have 16,396 on a minor degree, So we will have surpassed the intermediate degree and really by a fair amount, not enough to push it into that irregular. Remember, there's the line for the irregular, 16,767. We would come close, and it still would be minor 5, and then completing intermediate wave C, and then above that, completing a primary wave B. So again, we're pulling into what I really continue to believe are, we've won the race, and it truly is going out super strong. It may not look like it, even if I pull it out to a daily chart, it looks better. It's like, wow, it is literally, right? I got a lot of fibs going there. It is literally going vertical. Poppiest, right? Just kind of go. And so I'm believing we continue. I do not think it's over. I am not jumping on a bullish or bearish. I'm telling you why. And it's a numbers game, and that's what happens. And it's volatility. It's volatility type trading, because you're selling volatility on an index to buy volatility in the components, and then you're buying volatility on the index and selling volatility in the components. Again, think of the action. If you're selling volatility in the options, you're likely selling puts, because that's where you're going to find it. And then you're going to be selling the underlying. And in the index, if you're buying volatility, well, volatility, you could be buying the VIX, you could be buying volatility, and on the SPX. And you do it by buying SPX options. So it's that type of trade. In any case, it's going to go on. We're not done with it yet. Tomorrow, I think today was a preview. And don't forget, tomorrow, pre-market, we have the banks. We got JP Morgan, Goldman Sachs, Citi reporting. I believe Wells is in there too, of course. But we're going to get a first peek. And people are like, oh, yeah, well, because they're expecting really great bank earnings. No, they were doing a specific trade. I think in advance of tomorrow starts the earnings season. And maybe something's going to get shook up here. And so that's one trade that you put on. In any case, I think again, wave 3 may be over. I'm going to go back down to my hourly chart. Maybe over, or we race up where wave 5 of 3 would be 2.618 times the length of wave 1 of 3. These are all within this wave. Okay, so I can do fibs within the wave. And that actually, if this wave is not done, projects to here, 15,806. Let me see, NVIDIA. Yeah. See, they got it up $4 more. So it should go on. Now, when wave 4 comes in, you're going to, even if I took it from here, right? You can run your fibs and you're just, nope. Yeah, wave 4. Okay, so there's the beginning of wave 3. There's the end of wave 3, maybe. We don't know for certain. But you would run, that's where you run retracements, and then you're going to be looking at 382. So that's the deal, 382, 15,482. And we may be coming off of it from 15,000. Well, here it would be because we're coming off of 15,741. If we go up another 60 points, these numbers will go up a little bit. But be looking for a wave 4. That's its full potential. If the market is not switching positions and is going to continue to roll through with the trading that they're doing and the volatility, it may swing at the end of the day. And that could be the fourth wave that we're looking for. I'm looking for whatever should happen. It's going to be a changing of, I don't want to say the guard, but a changing of the atmosphere, changing of, oh, we're now doing the opposite. We're buying volatility in the index and we're selling volatility in the components. And when that happens, then we'll see activity reverse. So in any case, I am thinking that could be the wave 4. But the wave count tells me that we should still expect one more hike, one more rise. And that again brings 15,800. And this number would not be valid. But if I had to go on this outside and on this one, if we break substantially above 15,800, it raises minor 5 to equality. Again, that's 16,396. Not up to that level yet, but dang close. Like the S&P, dang close. B waves can do that. B waves of this degree, the primary degree, which is what was happening out here, it makes sense because the intermediate C is completing primary B. That would be minor 5. There is intermediate wave C. So again, we're in the hood. We're definitively in the hood. We have additional hood, but we'll see. We'll see what happens here because again, I cannot disqualify, throw away, say never can happen a run up to here. And again, if we pop through that one, then we're looking at an irregular, and we're looking up here. Big numbers, folks. They are truly big numbers. 2.618 for minor 5, right up there with 1.382 for intermediate wave C. It all fits. If it should do it, I'm not saying it's going to, and I'm going to end it there. I don't want to get any more negative comments about this is what you said. I'm just revealing the numbers. All right, I'm going to finish it up there. Tomorrow is expiration. It should be a doozy because of the type of trades that are being done right now. Economic numbers, import price index comes out at 8:30 a.m. Eastern, import-export, and then consumer sentiment. Looks like we're going to get an improvement in sentiment. Interesting. It's a bull market. That'll come at 10 a.m., consumer sentiment. As for the next update, it'll be on the 16th. On Sunday will be the next Elliott wave update. I'm going to try to get a big picture technical update done on Saturday. But sometimes it becomes difficult. So in any case, we'll give it a good shot. Have a great trading day tomorrow. Next Elliott wave update on Sunday.